Condos, villas, and townhomes. Oh my. Condos, townhomes, and villas. Oh my. Condos, villas, and townhomes. Oh my.
Let me guess, we're talking about condos, townhomes, and villas.
Coming right up. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
Caught with the glasses on. Good morning, everyone. I am DeLynn Gaston. Thank you for joining us this morning.
There's never a dull moment right here on Moving Forward
TV. The stuff
TV.
that goes on right before the camera goes.
Yeah.
And it's not like we don't have warning. We have plenty of warning.
Yeah. Hey, one thing, you may learn something from our show, but just know we're fun to watch. Well, at least she is.
Just because I'm usually laughing at him.
It's perfect. So welcome, everybody. We are happy you have joined us this week for our weekly showing of Moving Forward TV. And this week, you know, we're always talking about the ever-changing market. So if you don't like things, whatever we told you last week may not apply anymore.
I know.
What we tell you this week will apply for the moment, and it may not apply again.
You know, and the funny thing is that, you know, we started this show
back in the early 50s.
No, more than 10 years ago, believe it or not, more than 10 years ago, after the real estate crash of the mid-2000s there.
I remember that.
And that's when we started the show to kind of like bring light to all of the changes that were going on. And here we are 10 years later, and there's still changes going on. Imagine that.
And you know,
more so than ever.
Yeah, absolutely. COVID brought its own level of challenges and changes as far as particularly with self-employed borrowers having to provide more documentation. And a lot of we have a lot of new real estate agents. And they're not, and things change for them too. We know that a lot of you watch our real estate professionals, and it's constantly changing. So welcome to the new normal in our industry.
It's just like, you know, was it Mark Twain who said, if you don't like the weather in New England, wait a minute?
Yes.
That's it, you know.
That's that way in Seattle, too.
Yeah, it's pretty much all over. Well, if you don't like the mortgage world, wait a minute, because it's always changing. And one of the things that has had tons of changes lately, and even more recently, is condominiums. And I don't know about you guys, but, you know, I was talking with my loan partner the other day, and she's been with us probably, Lisa, a good 8 years, I'd say she's been with us. And she said in the last like 3 months, we've probably done more condos than we have in the last 8 years. Right. Is that crazy?
And there's a reason for that, because first of all, inventory, you know, as you all know, there is no inventory in the market. This is no shocker to anybody. And condos are surfacing now. People are willing to part with them that maybe have, you know, were upside down, and suddenly now they're not. And condos can offer a lower price point than a single family townhome or even a villa. And there's reasons why their price points may be lower. And we're going to talk about the lending side on how it's different than a townhome and a villa.
Not only that, we wanted to clarify for any buyers out there or any of our newer realtor agents who are watching the differences between condos, townhomes, and villas. Oh my.
Oh my. Oh my. And you know what? The big part when we qualify people, I just want to remind before we talk about the differences. Condos, remember, typically will always have an HOA fee. And they're typically much larger than those of a single-family residence or a PUD, planned community, depending on, you know, what amenities they have. But that counts into the debt ratio. So a lot of people look at the price point of, oh, I can buy this condo for $200,000. Well, the HOA fees are $500 or $600 a month. That $500 or $600 a month can get you a lot more mortgage then then that's typical. So people forget about that. So don't forget about the HOA fees, how much they count. They absolutely count towards your debt ratio, and they add to your, well,
And
they're
if
not,
they're high, that's going to cut into how much you qualify for.
and they're not part of your, they will never be part of your monthly mortgage payment, but they are part of your monthly payment. So just a friendly reminder of that. So let's talk about the differences, because a lot of people don't know the difference
Right.
between a townhome, a
So-
villa, or a condo.
So, when we're talking to people on the phone, that's one of the things that we ask them when they say, oh, we want to look at condos. And I say right away, okay, why? What is it about a condo that you want to see? Because they don't know the differences between condos, townhomes, and villas. So townhomes and villas are looked at exactly the same way as a single-family freestanding house all by itself. Condominiums are not. Even though townhomes and villas are attached housing, that's what they call it, attached housing, the way the developer originally, when they built it or converted or whatever, the way they filed the paperwork in with the land records, that's kind of what is driving it.
It's the HOA. It's the association.
How the association was set up in the beginning, and how it was filed by, and obviously, the developer who created the project. So if it is a condominium, it follows an entirely different set of rules, whereas if it is a townhome or a villa, just attached housing, follows the same rules as a regular house. So there's no extra stuff that we have to worry about in those. Condos is the only thing that's a little bit different.
Well, condos are a much higher risk for the lender, because if that condo association were to fail, think about it. What if it went broke, the entire community could fail? I mean, because they're collecting your dues, and if people aren't paying their dues, or if they're not budgeting wisely, if they're not putting money away for reserves for future repairs, because the association on a condo is typically responsible for all of the outside maintenance of the unit, the building itself, the surrounding grounds, the roof, anything, and you basically own walls in. That's your responsibility.
When you walk in the front door, that's what you own.
And if the project were to fail, per se, or go broke, that whole association goes poof. Well, now the lender is holding the bag on a property that is basically going to be worthless. So there are extra layers as a lender that we have to go through. So not only do we have to approve the buyer buying the condo, but we have to approve that HOA, that association, that project. So
there was a while, actually, in the mid-2000s after the, and that's probably why condos are becoming more popular a little bit now as well. There was a time that they stopped lending, they being Fannie Mae and Freddie Mac, they stopped lending on condominiums in the state of Florida. The entire state was cut off. They weren't lending at all on them. Do you remember that?
Yep.
Little at a time they started coming back, but you had to put 25% down. Little at a time they started coming back, but you had to put maybe 20% down. So they're coming back in pieces, because at one time I can remember there was entire, after the craze of the 2005, when everybody was like buying houses and condos and everything, entire high rises down in Miami, condominium high rises on the water, completely vacant.
Wow.
Completely
I remember
vacant.
that. I remember
like
that.
158 units or something like that. Not one of them.
I remember
occupied.
that.
So that's why they said, okay, no condos in Florida. That's it.
So how do we know the difference between a condo? What's your best way to verify? So a lot of buyers are out there looking, and sometimes things look like a condo.
Walks like a condo, talks like a condo, smells like a condo.
But it's not a condo. Yeah. So I would say the best place to look is always the county of records, public record. How is it registered?
Yes.
And typically, like on Pasco County Property Appraiser site, it clearly says townhome.
Right there on
or
page
it'll say
1.
villa. And there are people who say, oh no, that's a condo, I can't buy that, But it'll tell you black and white how that HOA was filed. So that's the first place to look.
Absolutely.
Don't rely on the Zillows of the world, the Realtor.coms, because sometimes those are incorrect. Public records are always your best source. I know a lot of them pull from public records. Sometimes I've actually seen I know listing agents never make mistakes normally, but sometimes they actually put them in the MLS wrong. I've seen it.
Yes. That's why I agree with you 150%. And just if you're not sure how to get there, just Google whatever county you're looking in: Hillsborough County Property Appraiser, Pinellas County Property Appraiser, Pasco County Property Appraiser, whatever county it is that you're looking at, just Google the property appraiser. That's going to bring you right to the page. You plug in the address, and it's going to come up, and it's going to tell you right, usually on page 1, if it's a condominium or not.
So let's pretend that
Okay.
you know now it's not a villa, it's not a townhome.
It's a condo.
It's a condo.
This is truly a condo.
So what we're going to run through, and we're going to give you some tips on what is the lender going to be looking for in a condo, what they like, what they don't like, and why. Because people are like, oh, this condo's been here for years. You know, if you have a cash buyer, it doesn't matter.
Right. It doesn't matter.
It doesn't matter.
But if you don't,
you know, then the lending requirements are different. You need a little extra time because the condo project may require, and I know this will shock you, but these HOAs, some of them are volunteers that help with the board.
God bless.
Yes. And they don't exactly run and drop what they're doing when we request documents.
Yeah.
I mean, we have projects where we're waiting for questionnaires for how long?
And that's the other thing.
And it can cause a delay on the closing.
If you're a listing agent on a condo, one of the biggest things you can do to help us out, help any lender out, is get us the right contact person for the HOA. Some of them are automated, like HomeWise. They have HomeWise. Some of those condo companies, there's sometimes, if everything is online, that's great. They do charge money, so make sure you warn your buyers as well. There's going to be fees that are involved in getting the condominium project approved or getting the questionnaires answered. Some of them charge like $175 just to hand out, fill out a
One document.
one-page form.
Yeah.
It's crazy.
Some are worse than that.
Yeah.
And estoppels
Yeah, it's
for that title needs to get to show that the dues are all paid up and so forth before you can close on it. So there's definitely extra
maybe
layers.
some negotiating right up front with the seller of that property that they pay for, all of the things like that. I don't know.
Well,
Whatever.
the seller typically does on the estoppel.
On the estoppel, but,
Yeah, but
not on
not-
like the condo docs.
not on the condo
If they
docs.
have the condo docs,
Right.
if they can get the condo docs before they list the property,
That's
that
a
would be great.
What a brilliant idea, DeLynn. I love
Give
that.
them
They
up
may already have them. You're so smart.
That could save the buyers like $350 or something. I've seen some of them outrageous
Yeah, it's
just
pretty
to
great.
get a
And
copy of the docs.
it could potentially avoid a delay on a closing. So let's
Yeah.
talk about some of the things
that are ineligible.
ineligible. Yeah, my
Ineligible.
favorite.
These are the things that pretty much right off the bat we know this is not going to work. And I'm going to
Yes.
start right off with condotel. So if it's any kind of, I'm just jumping right in. If it's any kind of, this is over in the Orlando area a lot. I know that they have some, hotel, condo kind of places, maybe down on the beaches, in the Tampa Bay area and further south. In the Miami area, they have condotels, things like that. These are not going to, no matter what, they are never going to be approved. So if it's anything like that, it's
All right.
more likely than not going to be approved.
It won't. When we say it won't be approved, it won't be approved Fannie Mae or Freddie Mac
Correct.
or FHA or VA. They're just ineligible because of the nature of the way they do things. They're transient type rentals. They're ones you'll find on Airbnb where they have a check-in desk.
Right.
And so forth. There may be a resort where they have
selling
amenities.
timeshares.
Yeah,
There's
so
some beautiful ones over in Orlando.
and they're great if you're an investor because you want to own one of those and collect the daily
But you're paying
rentals.
cash.
Yeah, so
Not
just
getting
be
on
aware of
on
that.
that.
So condotels, for the most part, Fannie, Freddie, FHA, VA are a no-no.
No.
But
No,
there
no, no.
are, I have to tell you, there are some portfolio small local banks
Mm-hmm.
that may consider those type properties. but your major, lenders are not going to be able to
And
do
if you're
those.
not, and if you're not sure, some of the things that they tell us to look for, if it's less than 400 square feet,
That's a
not
problem.
happening.
That's a
If it lacks a full-size kitchen, not happening. If they advertise short-term rentals, if they're located in resort areas, that's kind of iffy, but, because not all of them. Interior doors and connecting adjoining units, like you see in hotels, if it has anything like that, that is not going, that's not going to work.
Yeah, so it's not going to work with any down payment, because I've had
Oh,
people ask
this
me.
one's funny. We have the PowerPoint up for you guys, too. I think this one's funny. Legal name includes the word motel, hotel, or resort.
Yeah.
Dead giveaway.
Yeah. Yeah, that's a ringer.
Probably not going to work.
I know.
All right. Let's go on.
You know what's so funny? You say that.
Yes.
I remember back in the day when I bought my beach condo.
Yes, you have one.
The name of the property is Emerald Beach Resort. And this was before all these regulations.
Rule changes, right.
And I went through a company that's still around. I won't mention the bank name. But I remember my AE said, don't say the word resort in the property name. I'm like, why? What does that matter? Who cares? So in the title, they just took resort off of it, and it closed. Now, could I ever get it refied now? No.
Not in a million years.
You have to go through a local portfolio bank to do it. In fact,
Yeah.
I saw a post yesterday
We
in
do
our group
resort
sites.
condotels.
No, it said in it, does anybody know anyone that can refinance and capture these lower rates and find a bank that'll actually do it in this project? So, yeah.
Yeah.
It's not just
No.
us. It's everywhere.
And keep in mind, it's not any of the lending institutions, mortgage companies, or banks. It's Fannie Mae and Freddie Mac.
They just
It's what
don't
they
want to
will and
buy.
They won't accept it.
They just feel like in a market collapse, those are the first things to go, because the
And
first.
that's more of a commercial kind of a market thing anyway. Commercial lenders will do that all day long, but they're not going to do individuals. They're going to do the whole
They
project.
want to do the whole project, yeah.
So-
Because if you think about it, if the market were the tank, the economy, what's the first thing you got to give up?
You're going to give up your vacation home.
Yep,
You're not
so-
giving up your primary residence, that's for sure.
Yes.
You're not giving up your car
And-
that you're going back to work, back and forth to work with.
And
You're
those
giving up
type-
your
and
fun
those-
stuff.
And those type properties, you don't live in them for 6 months of the year.
No.
You have people coming in for 2 nights, 3 nights a week, whatever. So, usually though, I've noticed the projects that can be approved are the ones that will allow like a 30-day lease minimum.
Oh, okay.
And we have a number of those, so that's a little different.
The other thing to be aware of in condominiums
Dun,
that
dun,
that
dun.
could stall things, delay things, require further documentation, or just nix the whole project, unfortunately, is litigation. If the condominium complex is in any kind of litigation, not necessarily all litigation, because sometimes things are fine, but if it has anything to do with structure or the integrity of the building or things like that, that could definitely potentially be a problem.
So what happens is owners get mad at the developer. They group together and they might say, you know what, every one of these units has this crack in it, or it's faulty construction, or these balconies
We had this one happen.
are not stable, they don't hold
gonna
up.
fall down.
When you
They're gonna
built it,
fall
they were
off.
bad, and everyone, they could be suing the developer, and if the developer still has control of the HOA, that's another red flag of it. Now, there are ways that it can be approved even if there's litigation. One way is if the lawsuit is for less than the insurance coverage
Right.
of that policy, the master policy per se, then it may be eligible. So just because there's litigation doesn't mean, it's dead in the water per se. So, keep that in mind. And there is a list of approved projects out there already. So some projects are pre-approved.
It's called the PERS list, P-E-R-S, and that is out there that you can certainly look it up. And a project, if you're wondering. And I will just give you a heads up on these websites. And FHA has a list as well. We get a lot of questions about FHA's approved condominium list. On either of these websites, less is more. So just put in most cases,
Yes.
the street address and the street name. Don't put street, drive, court, or anything like
It
that.
won't find it.
It won't find it.
It'll say it's not approved.
And I would do it by address. I wouldn't do it by the name of the complex because, again, is it condo? Is it condominium? Is it Roman numeral 1? Or is it the number 1 afterward? Any little tiny variation, it's not going to find it. So less is more. And
Yes.
play around with it a little bit. It can be pretty frustrating.
So, and then another thing they're looking for is the overall solvency or the way the HOA operates. They want to know things like the number of investors
Right.
that own in the complex. So if it's highly investor owned, again, that's a project that's most likely to fail because, again, the market tanks. What's the first thing people are going to stop? Okay,
Right.
Because with the high investor, they're going to stop paying on their vacation home first.
Right.
They're going to make sure their primary residence
They're
is
gonna
good.
stop paying on
They're going to
their
provide
rental
for the family.
properties.
They're going to stop paying on those. It's the first thing to go. So, and that definitely also the other things are the budget. Are there reserves? Is more than 10%
If
going into
something does
future-
happen, exactly,
Right.
to the roof or to the pool and it needs remarciting and, the pavers need redoing, big ticket items the roofs or whatever, big ticket items. So is there enough money in reserves to be able to do that? Now, your buyers should be they should be concerned about these things as well. So definitely something that you're going to want to, everyone's going to want to look into.
They want to know that there'll be reserves to make sure that the complex is safe. When something happens structurally, danger, a railing is broken, who's going to fix it? Where's the money coming from? Will the money be there? A sudden unexpected expense can happen. They also want to make sure there's proper insurance coverage. They also want to make sure that there's not a large number of defaults in the complex where people are not paying their HOA fees.
That's absolutely a biggie. So and that's what happens first, quite frankly. If people start hurting, especially, we're in this COVID thing right now, right? So a lot of
What is
times
that?
people have, have you ever heard of it?
No, is that new? Is that an acronym?
A lot of people, when they're going to be paying their mortgage, perhaps they're paying their car payment, they're paying what they can, but maybe they're not paying the HOA fee. And then another month slides, and then
Yes.
another month slides. And one of the things that shows up on every single condo questionnaire, and every lender has their own condo questionnaires, but for the most part, we all mirror Fannie Mae's or Freddie Mac's condo questionnaires, so they're pretty much the same thing. But one of the things that they're looking for is how delinquent is the HOA fees, because what if something does happen? All of a sudden, the pool's going to stop getting maintenance.
Yes.
The grass is going to start because they can't, the HOA can't afford the lawn company anymore.
Yes.
So things start to look tattered. Now the property values are going down in that project. So that's a major concern as well, is the number of people who are delinquent on their HOA fees.
So there is a solution when all these things happen. If you want to make your life easier,
Buy something else.
well, that's,
Sorry.
if you want a condo, we're here to help you. But the way to do it really, in my mind today, is if you're showing a condo as a listing agent or if you're a buyer, have 25% to put down. Now, you're not going to get a condo tel. Those are no-nos. They're just ineligible. But you can, with 25% down, your LTV is 75% max, but you will get what's called a limited review, which means the lender is not going to look and scrutinize the budget as much, the project. They're just basic items they're going to be looking for because you, as the buyer or investor, will have skin in the game.
Right.
You're not doing 100%.
They feel a little more protected.
Yeah, you're not doing 100%. You're not doing 3% down. You're not doing... it's not an FHA type thing. It's a conventional 25% down. So,
and that being said, if anything less than 25% down, the project has to be approved. Again, whether you're putting 25% down or less, there's 2 separate condo questionnaires and they have to get filled out. So there is still a condo questionnaire even if you're putting 25% down, but as Barry said, they just don't scrutinize as heavily because they feel safer. But if it's anything, even if it's 20% down, yes, we still have to get the project approved through Fannie Mae and Freddie Mac if it's not already on the PERS approved list.
Yeah.
So, and sadly, a lot of them are not.
And we can show you up on the screen here. We just had it up on the maximum LTVs on all of the, the different project types, if it's your primary, if it's your second home or your residence. So
different down payments required for each. The other thing that I did want to mention is
there's more. Wait, there's more.
Wait, there's more. What we're talking about here mostly is conventional financing. FHA and VA are totally different. They have their own lists. So if you are a veteran, we have to check with the Veterans Administration to see if it's on their approved list. And if you are going with an FHA, if you're an FHA buyer, then we have to see if it's on FHA's list. And for what it's worth, I don't know if it's changed, but at last check, FHA is not adding any new projects, whereas Fannie Mae is adding new projects. And here's the LTV maximums that you were talking about.
Yes.
And we can certainly add projects on Fannie Mae, but FHA is not.
Yes, and the key word on that LTV chart was established. So if it's still
Big word.
Yep, if it's still in control by the developer,
you're not getting approved.
No, you're not.
You're just not getting
the
approved.
developer has to turn it over to the owner. So there's so much to learn on condos. It's like a whole different animal. People think they're the same, they're not. So keep that in mind. Villas, townhomes, you're fine. No different, like we said. So, all right, let's talk about upcoming things, and I just want to give a real quick plug to our charity of choice and what we're doing in the community, West Pasco Business Association, which we're a part of. We appreciate all your support. Right now, we're offering rental assistance.
The HEART program.
Yes, so if you know anybody that has challenges and they live in Pasco County, needs a little help with their rent or utilities, as in water and electric, go on WPBA.biz. The forms are on there. There are income restrictions, and
click on the HEART program.
Yep, you'll see it up there on our website. Check it out, and it's on WPBA.biz. You'll see it up there, and we're happy to try to help you. So if you know anybody, send them to our website. And
if you are a landlord and you have some tenants, please tell who are perhaps behind on their rent. Please tell them about the program as well.
We have dates coming up too. We have our upcoming Lunch and Learn via Zoom. We are offering down payment assistance in Pasco County.
It starts this week.
It does start this week, actually.
For Pasco County.
Yes.
It's back. Yay. It starts this week for Pasco County. But you still have to be certified.
If you want to be certified, get on our Zoom. We'll get you certified. You just need to log on and join us, learn about the funds we have available. It's on April 13th at 11:30 a.m. Eastern Time. Join us.
If you haven't already been getting our links, then please reach out to either one of us, and we will get you set up on the list so that you can
find it on the Mortgage Firm site. Thanks, everybody.
We appreciate you watching. We are Today and Every Day.
Moving forward. See you next week.
Bye-bye.